Ladies and gentlemen, Keeking here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down 1.1% there on the S&P Nasdaq, down close to 2%. Semiconductor held up really well. You think, the way the semiconductor moved this entire year, trumping everything else, you think down day like today, you think the semiconductor will tank, but holding up really well here. Dow 1.2% negative. Russell 2000 got hit. More than 2% negative there, along with the transport. Banks down, energy down, biotech is down 2% or more. Healthcare holding up well, along with the home builders. Utilities green, slightly there. Retail got hit. So this is what I mean. Retail had a monster year this year. And so, it's, like down day like today, you want to see, you think you should see some of these leaders to tank harder, which retail has done here today. The emerging market is positive a little bit there. Bitcoin down 3%. Gold slightly up, but silver and miners got tanked today. Dollar pretty much flat there. Oil down. Treasury bond flat. VIX popped 15% positive today. Let's look at the S&P 500 ETF. Spider, 65-minute chart here. So here is the shenanigans, right? The shenanigans of shenanigans here. I think this is when it comes to short-term shenanigans, like we've seen last couple trading sessions, I don't know if I've ever seen this kind of sequence before, where we, look like this is going to get up and make new all-time highs right here, and then we just gap down and tanks all day long. And then looks like, it's going to continue to tank and continue to drive the price lower. But next day, after the holiday, Thanksgiving holiday, next day we open up, market is gapped up. And that's the day when we hit a half day, right? And then, it looks like this is going to go get back up, potentially new all times. It comes back down, tanks. And then next day, it gaps out of nowhere. And then today, Today we gapped up, right? Today we gapped up. Like yesterday, we came down and tanked. Today we gapped up and looked like, you can see the first 2 hours. A bullish move right here. So we actually saw a very decent sized gap up. And then we saw 2 hours of follow through, as you can see right there. And out of nowhere, it just start coming down, filling all these gaps and keep tanking. True shenanigans we're witnessing in the last couple of days, right? I don't hate shenanigans. What are we gonna do? What are we gonna do without shenanigans?
I don't want to kill you. What would I do without you? Go back to ripping off mob dealers? No. You complete me.
In this market, I'm not going to just, sit here and watch the market go sideways for months and months and months. I'm not going to do that again. We need shenanigans. We need some up and down, movements, those erratic shenanigans. That way, the fear gauge is gonna kind of keep that fear elevated. Some of these short-term, traders get kind of whipsawed and left and right. Market is gonna bully some people here and there, bring some anxiety back into the market, crack that complacency in the market. We need shenanigans. And we're not gonna able to sustain this market without shenanigans. You start trading this market, you signed up for this. So if you're moaning, whining, being all sad last couple of days because of all these shenanigans, well, you should only blame yourself for signing up for something like this, not understanding this is part of the game we're playing. That's why if you understand the big picture, you're probably not gonna be freaking out right now. But anyway, we talked about on the last update right here. This gap must be filled. If not, you guys remember on the last video? Watch out. This is still the level for shenanigans, right? And so shenanigan, got back up, shenanigan. And I love that. I love that because this is what makes the market what it is, and that these shenanigan down moves is going to provide liquidity into the market. So once the market is elevated too much, there's too much complacency, it needs to kind of reset that complacency. It needs to kind of reset the optimism, right? And then kind of bring back the fear, and then does market makes its up and downs, and then also provides opportunities when they present itself. So right now, the problem right now, though, is that short-term moving average is now continue to act as resistance. We have broken below the impressive resume guy, right? The midterm, right? So I'm going to zoom out here, right? Currently, obviously, with these lower highs and lower lows, we do have a cultivation of a downtrend here in the short term, right? So benefit of the Dow continues to go to the sellers. For that sentiment to shift back to bullish, well, we need to fill this. As long as this gap, this is what we said last video, as long as this gap stays open, things are going to be hectic for the bulls. And I talked about bears, only weapon you do have right now. Because in the long term, and the primary and the midterm, it favors the buyers. We're in an uptrend in the long term and the midterm. But in the short term, as long as this gap is protected, this down gap is protected, bears are going to make bulls' life miserable. And that's kind of what they're doing. So in the short term of things, bulls are still in, bears in the short term of things in control. So let's zoom out and check out kind of the midterm of things, right? So you can see in the midterm of things, we have broken below my midterm moving average right here. Last time we did that was right here. And the shenanigan day came. I mean, it was already shenanigan here, and then like a big shenanigan with a gap down. And then out of nowhere, we see that rally right there. So keep that in mind, bears, because we're still in this midterm uptrend. Are we in a midterm uptrend or midterm downtrend, right? Your 8th grade daughter will tell you we're in a midterm uptrend because we're still in the vicinity of potential higher low, right? So we're just in the midterm bullishness, midterm uptrend, dealing with the short-term shenanigans, short-term downtrend. So, when you're dealing with the overall uptrend, you might face something like this kind of rally, something like this. Just keep that in mind. That's just all kind of the part of this market's shenanigans that it performs. But, just to kind of keep things in perspective, I think 2 sessions ago or something like that on the video, I put out this, Fibonacci here. You can see that that's the peak and that's the low. And then you can see that was a first level of fib right here, coinciding with my midterm moving average. We broke that. We went to my second level of fib, which is a 50% retracement, which is 450, which is coinciding with my gap area right here. So 449 is rather important level. The next important level, I know the bears, man, brought it down, broke below that prior pivot, the prior peak, broke below the midterm moving average. Now we're dealing with 450. So this is a level likely to see at least some sort of a oversold bounce in the micro term. So if that happens, what bears want to do is bears want to utilize that midterm moving average as new resistance. So let's say this thing gets up, right? That midterm moving average might do something like that, sideways or something, and then this thing potentially come back down and fill this game. That will be the game plan for the bears. But buyers obviously want to reclaim it. Maybe you want to retest that short-term moving average, kind of let bears be scared a little bit. You know what I'm saying? Because overall, as this down gap is open, things are going to be hectic for the bulls. But you know how bulls are. They're not going to make it easy, right? That's kind of the level that we're on. Let's go to the oscillator and see if we can extract any more information here. So look at this oscillator first of all. And I find this kind of interesting right now because very, very interesting because, you can see last time when we saw this thing losing that midterm, we did come down and push this oscillator all the way to the bottom of its span. I'm a little bit perplexed to and bewildered at this point that we definitely seeing a tankage in the market, at least in the last couple days or so. I mean, with some shenanigan gap ups and gap downs, but we are seeing some tankage, right? Why? My oscillator's up here. We're up here elevated, not hitting the bottom of his band. You know what I'm going to do? I'm going to zoom out here, and it's very interesting. And oscillator is always something interesting going on, right? We do have a lower low here. And we don't have a lower low on the oscillator. We actually got potential higher low. I say potential because we haven't seen a full cross. So here's something that I want to tell you right now. If bulls bring the price back up tomorrow or next couple of days or something, if this oscillator is starting to get up here and start to find momentum with these oscillator higher lows, that's what I call a bullish divergence. And if you've been following me this entire year, when the bullish divergence occurs in a midterm uptrend sentiment basis, that usually became a proverbial bottom. However, if bears continue to put pressure to the buyers, then we could also say that there's a lot of room, because we're not part of this oscillator. We're not oversold. Bears got room to move even after this kind of downturn. So this is kind of a bittersweet spot for both bulls and bears. Bulls are gonna try to make that bullish divergence work, while the bears gonna try to push it even lower. And all of that can be determined tomorrow. I'm gonna come back for you. I'm gonna reassess this situation, and we'll have a better idea. Enjoy your evening, and good luck trading tomorrow.